Hello and welcome. My name is Kevin Igo, Managing Director of PFP, and I'm delighted to be joined today by Clive Flood and Vicky Morrell of GovGrant. Now, today's webinar is primarily about R&D tax credit claims, a technical update, but it's really in reference to the huge number of R&D inquiries that we're now seeing that we felt it would be really useful just to discuss the background of it and what's happening with real experts in the field. So, if I could just introduce Clive and Vicky, perhaps Clive, Vicky, you could say a little bit about yourselves, your background.
Sure. Shall I start, Clive?
Yeah, go for it.
Hi, I'm Vicky Morrell, accountant by profession. I trained in practice 25 years ago, then moved into industry, then moved into R&D about 10 years ago. Set up a small practice in the Midlands, as I'm sure you can tell from my accent. That was sold to GovGrant in August 21, and since then, well, initially I helped transition the clients over into GovGrant and then joined as their accounting partner director in September. Clive?
Thanks, Vicky. Okay, so I'm Clive. I'm the Chief Operating Officer of GovGrant. So my background is predominantly in IT and manufacturing. I had, in my previous manufacturing role as an operations and production director, unbeknowingly written R&D reports for the company when I didn't even realise I was. So I was paying a firm 20% to do my R&D claim, and it turned out I was actually doing most of the work myself anyhow. So that's how I ended up working for GovGrant when they spotted that on my CV. And I've been with GovGrant now for 6 years, coming up to 6 years. So yeah, that's where I am.
Excellent. Thank you.
Sorry, go on. You go.
Thank you very much. Yeah. So before we continue, if I can just say to everybody, we will be sending out a copy of the slides afterwards, and maybe a recording. But however, as usual, if you've got any questions, please feel free to ask them. Both Clive and Vicky have said the more difficult the questions, the better. They like a challenge. So feel free to ask what you will. In all seriousness, though, Clive, I've known Clive for a number of years. Clive is a true expert in this field, and there's very little he won't be able to deal with for us. So, without further ado, if I hand over to, is it yourself, Vicky?
Yes, I'll kick off.
I should have said sorry. If you've got any questions, yeah, just put them in and we'll ask them throughout. Thanks.
Super, that's great. Well, thanks, Kevin. As I'm sure you're aware, the aim of this 1 hour webinar is to, and just bear with me, my screen has stopped working. Can you, sorry, apologies for that. Yes, so the aim of the 1 hour webinar is really to talk through firstly, the current R&D landscape, what we're seeing over the last few months and probably years as an overview, then onto HMRC inquiries, approach and penalties. As Kevin mentioned, there's definitely a lot of activity around inquiries from HMRC at the moment, so that'll be something that we will run through shortly. And then lastly, we'll talk about changes following the spring budget. Obviously, last week there was lots of conversation around what will be coming into place in April 23, so we'll go through the detail of that. So really the current R&D landscape, there's been lots of conversation and communications around the general R&D tax credit scheme over the last few months and even years, really. I think, 2019 R&D spending was at £38.5 billion, which was 1.74% of GDP. That is comparable, though, to USA, that's at 3.1%, Germany at 3.2%, France at 2.2%. So there was definitely a recognition from the UK government that there was a need to look at the R&D tax credit scheme to see what we could do to improve, to encourage more spending in R&D. In 2021, the government had a target of 2.4%, but it's very much a positive message. It was all around how do we push innovation, obviously conversations around the payback, but very much in a positive conversation of what can be done. Then came the judge report. I'm sure a few of you may have seen or heard or even read the judge report. That was a report that was published by a gentleman called Professor David Connell of Cambridge Judge Business School. That was in May 21, and basically that effectively it slammed the scheme. I think the headline was something like the government's £7.3 billion R&D tax credit scheme is failing to deliver significant additional spending in research and development. It was quite a negative publication. It was describing the R&D tax credit scheme as a costly failure. There were probably questions in there that needs to be addressed, such as payback, particularly around the SME scheme. But overall, it was quite a sort of a shock, I think, when that came out, just how negative that had been delivered. Following that, again, you may be aware, but the ONS restated all their statistics. They went back 15 years. I'm sure it was nowhere near as straightforward as this, but basically they said that the way they had calculated R&D spending, particularly around the SME scheme, had been inaccurate. So they went back, they restated all the ONS figures around R&D spending, and that actually resulted in R&D investment coming out at 2.4% of GDP. So suddenly the commentators were saying, oh great, we've hit policy aim, we're doing really well, isn't this great? But then obviously on the other side, the other sort of conversations were, well, no, it's still not where we want to be. We're sort of still lagging behind Germany. It's not where the UK needs to be pushing forward. So lots of conversations, lots of debate all around the R&D scheme, and then came the mini budget, which I'm sure you all heard, and we certainly were. We were expecting there to be implications to the R&D scheme. As I'm sure you're aware, the enhancement rate for the SME scheme reduced from 130% down to 86%. Payable cash credit reduced from 14.5% down to 10%. And then on the other side, RDEC increased from 30% up to 20%. So it certainly set a shot across the bows. I think probably it was a kind of the first move towards the single scheme. It very much was along the lines of trying to align those two schemes together. So amidst all the conversation and all the certainly in our sector, lots of sort of conversations around, gosh, what's happening here. But it very much did seem to be the first step in aligning those two schemes together. Then we had the House of Lords inquiry, the draft finance bill, May 22. That had lots of detail in there around potential requirements for reforms to the R&D tax credit scheme. In May 22, there was actually the House of Lords Finance Bill Subcommittee had an inquiry into what was needed into these reforms. Again, so you may even have watched that. It was broadcast on Parliament TV. Interesting viewing. They got evidence from numbers of sources, conversations around sort of the benefit of the scheme, questions about the two schemes and sort of the potential for going into a single scheme, questions over the payback to the UK economy, the effectiveness of HMRC in policing the scheme, whether the scheme had been modernised enough for where it needed to get to, and also a lot of focus on agents and their role in basically sort of helping businesses claim R&D tax credits. So again, very much in the limelight, and the output of that was a report. A chap called Law Lee of Hurley, chair of the Finance Bill Subcommittee, who really his sort of overarching comments were the fact that R&D investment, which is supported by the R&D tax credit regime, is absolutely fundamental, a really important contribution to the UK economy. However, fraud and error were costing the UK taxpayer £450 million a year. So obviously that needed to be addressed. He recommended further consultations on how the scheme needed to evolve and how it needed to, become more, or better policed, shall we say. And again, that was a real signaling for a requirement to improve the scheme, tighten the scheme. And since then, there have been further consultations around the SME scheme, the RDEC scheme. Are they driving the right behaviours? And also the the look to move to a single style RDEC scheme. The last consultation closed, Clive will correct me if I'm wrong, I think it was the 13th of March. And then by the summer, 13th, am I right?
Yep.
Yeah, and by this summer, we are expecting to see the first draft legislation around that single scheme. So it's certainly where we think the direction of travel is going to. So really, as a summary, where we are right now, there are we have these two schemes. They are which is different to other R&D schemes globally. I mean, there is a fundamental question over payback to the UK economy, which is a lot of the things, or a lot of the conversation, and what is being addressed recently. There's certainly been a spotlight on R&D consultancies, tactics of advisors, questions over blatant fraud at one end, where people are claiming, or people have been advised to claim for things that just are not research and development. To at the other end, people that are generally wanting to prepare appropriate compliant claims, but maybe just haven't been able to access the correct level of technical advice to be able to do so. So compliance hasn't been where it needs to get to. So that's where we are, but where do we think things are going? What's the future direction of travel around research and development? And I want to say things look good, things look positive. Again, I'm sure you're aware, 6th of March, the government launched a plan really to cement the UK as this global superpower in science and technology by 2030, and lots of structure and legislation around that. The plan really is to grow the UK economy through science, innovation and technology. There's £370 million backing this. Absolutely sort of fundamental is this new science and technology framework, which really is the first major piece of work that's come out of the new Department of Science, Innovation and Technology. And the aim really is to try and focus on a cross-government collaborative approach to pushing forward the innovation agenda. We have a new 10-point plan signaling the need for the UK to be globally relevant, very much looking at how they can support new tech startups, new startups in sort of science, helping researchers in various fields, creating pro-innovation culture, infrastructure, making sure that absolutely R&D is at the forefront. As part of that, we have talked about these 5 critical technologies in the framework. We're aware of this £250 million investment in 3 transformational technologies: AI, quantum technologies, and engineering biology. And then alongside that, there's future technologies, so future telecoms and semiconductors, and a real focus on these areas. I'm sure we'll touch on it again. Well, we will touch on it again. We talk about the spring budget, but even the spring budget, as I'm sure you recall, lots of conversation about pushing the innovation agenda from an R&D tax point of view, looking at supporting R&D intensive businesses, particularly in these kind of fields. Following from that, Clive, do you want to just run through the April 24 consultation headlines?
Yeah, so I think everyone's aware that the direction of travel, as Vicky said as well, is that they're looking to combine the 2 schemes to make it more transparent around what level of benefit you're going to get at the end, because under the current SME scheme, it can vary dependent on your tax profile. It can vary going forwards as to what the actual CT rate bracket that you're falling into. So that makes it hard for companies to plan as to what level of benefit they're actually going to receive versus the R&D spend. So the RDEC scheme as an above the line adjustment is more predictable, allows investors to see it more rigidly, and it's just more cast in stone, I guess, is the best way to look at it. And all of the figures show that the pound for pound spillover effect on the investment in RDEC is greater than the spillover effects on SME. So that was the main focus, is that the government see RDEC as for every pound invested, you get up to £2.70 of rollover into the economy. So whereas with the SME, it's up to between 60p and £1.20, so it's nowhere near. And I'm sure there's people that would cut those stats differently, but that's the reason that they're looking to get it into a single scheme. Overall, they have committed to spending a greater level. So this isn't about reducing the amount that they're investing in R&D. It's more around making sure it's being invested in the right areas. And it's the right innovative companies that are receiving the benefit, and they want to give the right companies more, but at the same time they're acknowledging that there is a level of fraud and error that is unacceptable, and they don't want to be putting money in those places where it isn't intended for, and it's not the intention of the scheme. So that's why they're now looking more at the focused industries. So there's already some changes that we'll talk into in a bit more detail coming up. Where we've seen the biggest increase in R&D claims overall is at the lower value of qualifying expenditure. So the people who know about the scheme and who are normally aware of it and making claims and in the right spot for making a valid R&D claim have probably been claiming for a number of years. Even if it was a new startup, the FD or the financial controller there probably is already aware of the R&D scheme. You know, this concept that no one is aware of the R&D scheme that's been around for so long is just bonkers. And some of the marketing tactics employed by some R&D agents or claim farms, as they're being known now, is very, very questionable. And we've challenged strongly on that front as well about stronger use of the Advertising Standards Agency. But that's where they're seeing the big increase in the volume of claims, is the low value or lower value, low end of qualifying expenditure. So HMRC are presented with an issue of, do we continue to invest heavily in resourcing and policing the lower end, or do we just stop it at source and prevent lower value claims coming through, and we make a higher bar for people to even qualify to submit a claim? So when the scheme was first introduced, there was a minimum qualifying expenditure of 25,000 before you could even make a claim. Over time, it reduced down to 10,000, and then it was eradicated completely. Part of this consultation now is, should we reintroduce a minimum qualifying expenditure level? And I think the general consensus from just talking to other industry colleagues is that that's probably where the majority of error and fraud is. So it's highly likely that there will be a minimum QE level. At what level, we don't know yet, but it's probably going to be at least the 25k that it was originally, if not slightly higher. And then there's
We've got some questions on that one, Clive.
Okay.
Somebody's asked from James. Thank you for your question, James. Nearly all of the inquiries I've seen so far are into small IT sector claims for under 15k, and the level of detail being requested is huge. Does this reflect what you're seeing and almost make them uneconomical to fight?
Absolutely, we see that quite a bit, and it goes against sort of the initial intention of the scheme, and making it easier to, and it shouldn't be onerous on the claimant to make a claim. But when it does go into inquiry, then as everyone is seeing, the level of detail required is significant. You were being asked to provide the same level of detail as you would for £1 million worth of QE for £35,000 worth of QE, and it's just not commercially viable to defend it. So we have seen situations where we've had to advise the client to say, based on, you're getting £5,000 back, to get this level of detail, you're probably going to be spending a good few days of your time, advisor time. Is it really commercially viable? So there are some genuine claimants that are having to withdraw the claim just because it isn't viable for them to get to that level of detail. So from that respect, yes, we are seeing that on some occasions.
Okay, thank you, James. The only thing I'd add to that is we obviously see a load of R&D claims at the moment. There are a lot at the lower end, but they're not exclusively to the lower end by any means. We're seeing the whole remit, the whole obviously gathering information, as Clive's alluded to, as to what level of business is producing more tax take. So yeah, they're picking up all sorts of sizes. Another question from Ebenezer. Nowhere in the spring budget 23 have I seen the hybrid rate for the R&D tax credit. If an accounting period straddles financial year 22 and 23 and the company does not meet the condition for intensive R&D tax credit, it implies that the rate for the tax credit will be 10%. However, the rate for the tax credit in 2022 is 14.5%. Is it fair to say that the hybrid rate of 12.25% should be used, which is obviously 4.5 plus 10% divided by 2 for the accounting period which straddles 22 and 23?
It would be 14.5 up to the 1st of April this year, so 23. The high intensity R&D check, which we'll come on to in a few slides time, comes in from the 1st of April, but it hasn't been actually legislated for yet. It should be coming in by the summer of this year. But what HMRC are saying is if you're going to be submitting a claim for a high intensity period, but bear in mind it doesn't come into effect until the 1st of April this year. So it will either have to be a short period. Chances are the legislation will be in place by the time you are submitting a claim that has gone beyond April this year. And in that situation, if you've got part of your claim you'd be able to submit on 14.5%, you'd be surrendering for up to the 1st of April 23. And then afterwards, the tax software should also be updated to allow you to still surrender at 14.5%. If you're high intensity R&D, sorry, I'm confusing myself now. If you're high intensity R&D for the whole period, so 40% of your overall costs is on qualifying expenditure, then it just remains unchanged. It's still 14.5%. The only thing that will change after the 1st of April is that the enhancement will be reduced from 130% to 86%. So the actual surrendering level is still 14.5%. If you haven't met that 40% of your overall R&D expenditure to meet the high intensity threshold, then all that will happen is that you'll be 14.5% up to the 1st of April, and then just the same as a CT adjustment or different rates of CT over the tax period, you'll be surrendering at 10% after the 1st of April.
Okay, thank you. Lastly, before we move on, we mentioned about the small value claims being uneconomical to fight. Tom says, is it a fair comment to say that more work and preparation should be done before submitting the claim in order to make it more economical?
Well, yeah, it's a fair challenge, but the level of detail, and I think it depends on how prepared and how well advised the client is in the first place. So a lot of situations where you're coming across this is where they either haven't got enough information or the level of detail necessary, or they've been ill-advised in the first place that what they're doing does actually qualify. So then to try and get the level of technical detail around the baseline and the actual advance in science or technology is where they're then struggling. Because to go into that level of detail, the small SME may not have abundant, that level of resource available to actually generate what's necessary, and that's where it becomes non-commercially viable.
Okay, thank you. Question from James. Thank you, James. Where a claim is withdrawn, whether or not due to commercial reasons, what's your experience regarding HMRC seeking penalties?
So generally, it depends on what advice was sought and by who. So we do come on to that in the coming slide. But essentially what we're seeing HMRC then ask the client or the claimant is, what did you do to understand the legislation yourself? If you used an advisor, what due diligence checks did you do on that advisor to make sure that they were professional, reputable, that they knew what they were talking about, and you were well placed to take that advice? Because all too often I was recommended, they're trying to fish out, was the advisor the one who was leading the claim process and you've been led to submitting the claim because the advisor sort of pushed you that way, or did you go and seek the advice of an advisor, and then in doing so did you check that they were? So basically, they're trying to flush out if the clients use an advisor, were they party to actually sense checking the qualifications of that company and bought into that due diligence process. So they're trying to stop people being able to say, well, the advisor told me, so I you know, not my problem, it's theirs. They told me it was qualifying R&D, and that's part of why they want a named sponsor from a senior company on the R&D claims going forward, because they want them to take ownership of everything that's in the report, so that clients can't turn around and say, they told me it was qualifying, so I just went by it with their advice. So sometimes we've seen up to 30 questions from HMRC asking the client to confirm what you did to convince yourself that what you have submitted was qualifying R&D and how, basically. And then depending on those answers, then would denote the level of penalties. So sometimes it is, there's no penalties because they see that you have taken advice from a reputable firm and you did go through a due diligence process. Other times they do think it's careless and they do think that you could have done more to check your eligibility, and you will see penalties as a result, but we will come on to that in a bit more detail.
Great, okay. I've had a number of questions on the inquiries and penalties approach, so I'll hold off of them until you've done your section on that, otherwise okay, we're in danger of you doing your presentation without doing the presentation. So thank you.
Okay, move on. So just kick off, Clive. Yeah, I'll just say, so I guess really the outcomes of the various conversations and consultations was really that HMRC needed to prove that they haven't been asleep at the wheel. The questions, how did they let it happen? We'd have this £469 million black hole. So they've obviously then changed their approach, and as we've just been talking about, they've been going through a process of opening inquiries and fees letters and various things. So I'll pass over to Clive to go through these.
Yeah,
Clive,
thank you. So, I mean, we're not being harsh on HMRC there to say that they're trying to prove that they weren't asleep at the wheel. If you imagine it as an honesty box, really, and people are there to put the money in and not take out what they shouldn't do, and it was fairly well self-policed up until moderately recently in the whole age of the scheme, but then it got to the point where obviously people were abusing it and taking more out than they should have done and not correctly evidencing it. So they've been forced into this action really by the actions of a few, but they're far-reaching because they're submitting quite a few claims that are making up that overall percentage. So what they've done, and they've been forced to investigate further. So it's also important to state that the legislation hadn't changed at this point. So the qualifying criteria has not changed. There's quite a few advisors and people telling their clients that we need more detail now because the legislation's changed, and it hasn't. The requirement to actually qualify for the R&D scheme is exactly the same. There's been a few minor changes, but not to do with the actual technical qualification of whether you are or aren't carrying out compliant R&D activity. What has changed is the level of checks that HMRC are now actually checking, whereas previously they probably weren't. It probably wasn't even looked at. So clients were thinking, oh, I've been paid out for the last 5 years. That means it's been approved. That's not the case. It's much more likely that it wasn't even looked at. So now they're looking at more, and that's where the things are starting to shape out. So they sent out nudge letters to 2,000 to 3,000 people, and they were basically just one saying, you've submitted an R&D claim. Are you sure you are aware of the legislation and if you actually qualify? We give you the opportunity to review your claim, and if you think that maybe you don't and it was in error that you've submitted it, you can withdraw it without any penalties whatsoever. So we've heard of a few people receiving those letters, and they seem to be sector specific, where they're targeting people in sectors where you wouldn't expect R&D to naturally be taking place, but we'll come on to that a bit as well. The Fraud Investigation Service, so that's a separate unit within HMRC that works closely with the R&D and the creatives, if you like, relief team. They've sent out 1,685 letters towards middle to end of 2022, and then a further 650 early this year. And that's where they basically are targeting active advisors and clients where they think that there's a genuine level of fraud or risk of fraud, and they're the ones that make the client sit straight up, because it's we haven't opened a criminal investigation, but we reserve the right to do so, is the wording in that notification letter. And at the end of last year, it was publicised as well. There was 10 arrests. I think one accountant was arrested and charged, and there was a couple of R&D boutiques that were also charged. So they are working very closely and starting to act upon the evidence that they're uncovering, which is good for everyone. They've also started a one-to-many compliance check. Again, we suspect that by SIC code. So in the letter in response to the Lord Hurley inquiry that Vicky mentioned earlier, so Victoria Atkins, the Financial Secretary to the Treasury, sent a letter basically explaining her answers to all the questions that were raised by Lord Hurley in that inquiry. And in there, that she does state that the one of the mechanisms that HMRC were employing is a one-to-many compliance check, based on industries and sectors they wouldn't expect to see R&D naturally taking place. So really the only way that logically HMRC could even do that practically is via SIC code. So what is the company's SIC code that's registered at company's house? And we've seen some of our clients actually fall into that, where their SIC code just isn't up to date. So they're listed as a wholesaler, but actually they're a manufacturer of various different things, but they may have started out as a wholesaler. So it's important to make sure that the SIC code is correct, and it's also a legal responsibility to do so. But and first-time claimants, so they said that they have actively targeted first-time claimants, just to make sure you've been around for a little while. Why is this the first time that you're making an R&D claim? Because that's kind of a bit of an alarm bell now. Have you been targeted by one of these spurious R&D claim farms who are targeting care homes and electricians and scaffolders? It's quite bonkers, really, and no wonder we're in the position we're in. Is there any questions on that side, or shall I keep going?
There are, but I think you're still covering a lot of it. So
okay, all right, I'll keep going.
We'll come back to it. Yeah.
So what HMRC are trying to do is to understand the level of size. If you keep going through, Vicky, please. The size of the fraud and abuse. So that the £469 million a year figure is a very high level estimate that HMRC included in their report, and that was based on the number of compliance checks in the preceding period. So what they are now doing in this enhanced check, and the great number, or the greater number of compliance checks that they're carrying out, is that they've committed to coming back to the Treasury with their findings in the summer as to, off the back of this much greater number of inquiries, so it's a much more representative value and sample size, what the actual level of error and fraud is, and it's widely expected to be higher than the 469 million. So that's, and then as a result of that, they're then looking to compile, well, what are the commonalities and where do we need to potentially restrict, and if there's a high level of error and fraud in a particular sector, then that may inform future legislation or qualifying criteria as to who does or doesn't even meet the criteria to claim. It's also trying to send a message to some of the rogue traders, I guess is the best way of describing them, that that kind of behavior isn't going to be tolerated, and we welcome that, because I think it just gives everyone a bad name if you're allowing that to continue. So we've been lobbying for this for quite some time, for them to have some more teeth to shut these R&D claim firms down, and even to the point where the Advertising Standards Agency even isn't taking any action against them when they're blatantly making false advertising in various different places. So hopefully this will be a good step to shutting those guys down permanently and hopefully seeing some criminal cases where appropriate. But obviously the main thing they also want to do is collect some more tax. They're HMRC at the end of the day. That's what they're there to do, to protect our taxpayers' money. So should we go on to the next one, or is that so this is into how they are approaching it, and we came onto this slightly when I was answering one of the other questions earlier. So in the one-to-many, and there are also some compulsory random ones that are being sent out as well, because they don't want to restrict it just to where they think the problem is. There are some compulsory or mandatory inquiries that are just being randomly selected. So they say, obviously they don't tell you exactly how they are targeting, because they guard that like the Google algorithm. It's not known, otherwise you'd be at a very unfair advantage, I guess. But what we are seeing is where it is a one-to-many, it is a generic inquiry letter. It isn't from a named agent as it used to be in the past. It's from a generic email address. And often it's high-level questions, just a generic letter on, please can you answer the 4 or 5 questions in a bit more detail. So it doesn't even, if it was submitted with a report, it doesn't even appear sometimes that they've read the report that was submitted, which can be frustrating. And then we've seen clients that have responded with the report, and then HMRC respond quite snottily saying, yes, well, we've seen the report, but we haven't, we want some extra information. So it's a difficult one to navigate sometimes. So we've covered that. Yeah, and we are seeing some boutique firms have already closed up shop and headed for the hills. So we've got clients coming to us saying, we've found ourselves in inquiry, the firm that submitted it, we can't get hold of them, the website's gone down. Can you please help us get out of this? So we're seeing more and more of that. We've covered most of this on here, I think. So the SIC codes that we are seeing most often targeted are ones that it's just our own sort of gut feel, as well as where you wouldn't expect R&D naturally to take place. So 4647 are wholesalers and agents, and then a mix of codes starting 789, which are all sort of, care homes and all the things that logic would say it's very unlikely that they are going to be carrying out compliant activity. Never impossible. That's one of the beauties of this scheme and why it's interesting to be around, but there's always a much less probability in certain sectors that you're actually cutting new turf and pushing boundaries of an overall field of science and technology. Whereas previously targeted inquiries, that would have been a named inspector, and it was much more, again, we'll come on to this again in a second, but they show that they've read the report and they're just asking very succinct and poignant questions about the report that they have read, and asking for a bit further clarification around this. And it's normally pointed at other things they're trying to flesh out around legislative changes or potentially future legislative changes around where did the IP sit and ownership, and if it was subcontracted. So whose R&D actually was it? We're convinced that it's R&D, qualifying R&D activity, but is it yours, or was it the client that you're working for? And at what point did that IP change hands? And another thing that we're seeing quite a lot of as well is, what did you do around patent searching before you embarked on this R&D project? So as part of establishing your baseline, what did you search in the patent world to see if that answer already existed? And another angle on a couple of inquiry letters that we've had sight of is, if this is your R&D, what did you do to protect it from an IP perspective? Which is an interesting angle. I think we could probably just move straight on to the next one, and that kind of covers that off. And then it's probably a good point to take some questions after that, maybe. So
yes, the way that we've finished the bit on penalties, I think that's where we go through what we have. Yeah.
So this is kind of this is a very loose gut feel and interpretation of the sort of tone and approach that we've seen from HMRC over the years. So pre-2013, it was very much a learn and let's walk you through this process. We're going to explain to you why we don't think it's R&D, and in some ways it was like a dual relationship, because the client was often educating the HMRC inspectors, because it was a learning curve for them as well. They weren't scientists, they weren't from a technical background, so often it was helping them understand the legislation as much as it was the client. Between 2013 and 2022, it was much more of a, right, we've got a team that really understand this now, and although there's been a lot of talk about HMRC don't have R&D specialist units anymore, so they don't have the 3 original regional units, but now they claim they've got a whole nationwide specialist or R&D specialists across the UK. So what we're seeing, or what we saw between 13 and 22, was that it was much more of a business as usual. So everyone should be aware of the rules now. The scheme's been around for a long time, and it became much more transactional, and it was much more, you know, this is how it should be. So usually in an inquiry, 80% of it is talking, 80-90% is talking around the technical compliance and whether what you actually did was compliant with the activity. The costs is almost, you know, it's black and white. It's relatively easy to box away once you've got and you've established whether what you did was compliant R&D activity, which is always the longest battle, if you like. Once you've done that bit, the costs are relatively straightforward. What we're now seeing is that it is much more assertive from HMRC, and they are much shorter turnaround times, much shorter deadlines. So I'm sure people on the call have seen it, where the inquiry notification letter will come out. The deadline to respond is 4 weeks from that date, even over Christmas and when the postal strikes were on. So it was just, and then they want the Comp 1 form sent back in the post as well. It's like, you know, we're all for shorter deadlines, but can't we at least do this digitally? So, but anyway, so that's the kind of difference that we're seeing now. It's much more challenging and much more, you tell us why this is, not let's talk about it and understand and try and help you find how it is, and let's understand how you reached that conclusion in the first place. It's not like that anymore. And there is definitely a desire to win from HMRC's side. It's like they've had a rocket to get rid of the fraud and erroneous claims. So they're very much hot on that at the moment.
I think just to add to that, the line at the bottom, the tax risk, I think it is worth mentioning that there very much is an increased tax risk now that clients need to be aware of when they are, you know, preparing an R&D tax credit claim. There needs to be consideration that they are doing everything they can to mitigate that risk. They are taking it very seriously. They are doing their appropriate due diligence. It's not a, you know, light-hearted, let's just do an R&D tax credit claim. It's a piece of work that is being undertaken, and the chance of it being challenged is now greater, and the client needs to be able to, you know, help whoever their agent or accountant is to defend that, because it is a, as Clive was saying, it is absolutely a different world that we're living in now.
Yeah, and I think just to highlight the level that they were seeing, and probably why they're as frustrated as they are, in that letter that I mentioned earlier that we can share, where it's publicly available anyhow. So this letter was written in November 22, and what Victoria says in this letter is, so far in 22-23, claims that are determined to be inaccurate were in 84% of closed one-to-one inquiries in that time frame. So 84% of the one-to-one inquiries that they opened had a level of error in them. And the average additional amount due as a result of the inaccurate claim was £128,000 that was due back to HMRC. So when you're presented with those sort of levels of inaccuracy, you can see why the heat is on. And I think there's probably a feeling that during the 13 to 22 period, we were nice guys and we were trying to educate you, and we weren't so harsh. Now, come on, it's time to be grown-ups and play by the rules. So if you're not, then sorry, you've had enough time to learn them.
Yeah. Okay. Should we move on? Do you want to move on to penalties, Clive?
Yep. So I think we covered this slightly earlier on in one of the questions that was answering, and it varies. So HMRC are obviously still adjusting what they're looking for and why, and there must be some specifics around that situation itself, because the questions that a claimant is asked after inquiry, whether it's just been adjusted, so slightly reduced, or a project's been removed, or some of the costs have been lowered, to being completely withdrawn, vary from sort of 10 to 15 right up to 30 questions that the client has to answer. And as I was saying earlier on, it is all around what due diligence did you do as a company in making sure that the figure going in your self-assessment tax return essentially was accurate, and that you understood the rules, and that the quality of the advice or the people that you engaged to give you the advice around the R&D scheme were suitably qualified to do so. Because if it's I did it because they told me, or they phoned me up and told me I could get 50,000 for no reason, then that's not going to wash. So they are pushing back very hard. And then the range of the penalty, obviously you've got to pay back any tax that was originally due, plus any interest that was accrued over that time. And then the level of penalty will depend really on the intent, so why the claim was originally made, how did you come to know about the scheme, is it actually the claimant's fault, or were they led and coerced into doing that by a spurious advisor? Because I was shocked when I was reading some of the responses, was that one of the reasons for the named company sponsor is because there were claimants, or when R&D claims went into inquiry, there were claimants that were responding saying, we didn't even know our advisor had submitted an R&D claim, which was bizarre. I couldn't believe that was actually in the report. But that's one of the reasons why HMRC have introduced that new measure. So that's on the knowledge and personal ownership side. The advice, what did we do? We've covered that. I think, is there any other on this side? And then the actual level of evidence as well that's collated. So what can you do to satisfy the requirements, and what do you have? And that kind of gets back to the original. When you first claimed, HMRC would have been a bit lenient, not expect you to necessarily to have all the documentation in place. But now you're aware, going forwards, we expect that you've got that documentation in place. If you're now 5 years into a claiming cycle and your documentation and house still isn't in order, then there's not really any excuse for that. So penalties, as with all HMRC inquiries, lack of reasonable care is 0 to 30%, deliberate and potentially concealed or deliberate is 20 to 70%, deliberate and concealed 30 to 100%. And then it's also, they take into account how proactive and how much you've assisted in that inquiry process. So if you've been responsive and been getting the answers back to them, and you haven't constantly been delaying, then they tend to be much more on the lower side. But if they found it difficult to engage with you and get the information out of you during the inquiry process, and you've constantly missed deadlines, then they tend to be much more harsh and want to make, they'll be just annoyed, I think, that it was a painful process, and try and reclaim some, I don't know what it would be, but.
Yeah, so Clive, you mentioned there about they expect greater documentation to be held nowadays than perhaps they did 5 years ago. Are they using, in your experience, lack of documentation in the later years as reason for making a discovery to go back into other years?
Not at the moment. So they can do. So if they were to, the reason I said about 5 years was if a claimant has been claiming for 5 years, you would expect their internal housekeeping to have improved over that period, especially if they've had an interaction with HMRC and they've educated them about the requirements earlier on in that process. In terms of opening up earlier periods, then they do have the right to do that where they suspect that there was error or fraud that could have gone earlier. We don't see it that often, but it does happen. So you can't ever say to a client that they won't do that. But especially if, say, you've got a claim open now that they find that project did not qualify, but it turns out that the start date on that project was actually in 2013 and it's been ongoing ever since then they're probably going to look at that because they've just deemed that there's no compliance now. So you've got the start date in this report of 2013. Firstly, why is there uncertainties that were lasting that long? But secondly, yeah, they could well, but we're not seeing it yet. I think they're very busy at the moment. Whether they choose
thank you. So we have a question from Harriet. Whilst the guidelines and conditions for a claim have not changed, the caseworker's interpretation of the guidelines has changed to some extent. For example, the guidelines reference an algorithm. The current approach is to dismiss any type of algorithm as mathematics.
Yeah, that is a very interesting one. So we've had that challenge with HMRC as well. They even use an example in their guidelines, as you say. But the challenge there really is the algorithm is the end result. So that is what I would say to that. You're not saying that the advance is the algorithm, because that's saying that the advance is the end answer. So in a product situation, you're saying you wouldn't say the product is the advance, because it's not. The product is the product. It's what it did and how you got it there. So the advance would be in how that algorithm was created. In terms of the interpretation, then that has to constantly change, because in innovation, it's like layers on an onion. You've constantly got more and more layers being built on the knowledge that was already there, and the tide is constantly raising. But that's why you need the technology, or sorry, the importance of correctly establishing that baseline of the technology that existed at the time the R&D project was started, because without that, it's very difficult to evidence how you built upon it and how you advanced it, especially if you're talking in software or anything like that. If they're looking 2-3 years later, then the tide is going to have risen massively, and what may well have been very uncertain at the time the project was embarked upon may well be common use and readily available now.
Okay, we've got a question from Wasim. Following an HMRC inquiry into an R&D claim, our client decided to withdraw the claim due to severe business pressures and time, etc. But HMRC have said they're waiting technical advice before deciding on the way forward. It's now been 3 months. Is this usual?
I've not heard of them needing technical advice on withdrawing a claim before. That does seem unusual, unless they think it's linked to something else potentially. I would imagine it's just fallen through the cracks there with the volume of inquiries they've currently got, and someone's just forgotten to fill this one's closed button. Essentially, I wouldn't think that there's anything more to it than that. And if you were to follow up, they'd probably just issue a closure notice, and then the penalty questions as well around how did you originally make the claim.
Okay, James comments, he's seen a 15% penalty being proposed by HMRC because although the company sought advice from a professional firm, they didn't also seek advice from HMRC before claiming. I'm not aware of any avenue for seeking advice from HMRC other than gov.uk. Am I missing something?
No, not missing anything. That's a first on me as well. So this is interesting. Yeah, I mean, trying to get through to HMRC is virtually impossible. To talk to them about an R&D claim, you just get passed pillar to post. So I would definitely push back on that one and be asking, or how, where does it say where we can get this information, other than the advanced assurance route, which you would have had to have done in advance anyway. Then it's pretty much there isn't anything, like you say, it's just the government website. So I would definitely challenge that one.
Okay, thank you. Lastly from Tim, we've seen compliance checks which have boilerplate questions and an additional minor question on the claim tacked on at the end. Is this fairly typical?
In the one-to-many inquiry letters, where it's likely to have been triggered by industry and sector, is our sort of educated guess. That's what we're seeing. But yeah, I don't think I've seen an inquiry letter recently that is from a named inspector. They all tend to be coming from the same centralized email address. And it's not until you start to respond that you'll then get the details of who's actually handling that case. But I think we touched on the generic.
I'm aware we've got about 5 minutes left, and somebody has asked the question about what are the main areas R&D claims fall down on, but I have a feeling that's going to be quite a lengthy answer. So perhaps if we get through your final slides, and those who want to hang on, if you answer that at the end, that'd be great. Thanks.
Yep.
So as we're short on time, shall I? I'll get all the points.
Yeah,
up
go for it.
So you would have run through, Clive.
So as of April this year, what we knew was coming anyway. So the requirement for submitting with a technical and financial report, which is great, but that then morphed into this additional information form, which we'll cover at the end. Claimant notifying their intent to claim, so almost like an advanced notification process, but that's only relevant where they've never claimed before or they haven't claimed in the preceding 3 years leading up to the claim period. So if they've claimed it in the earlier 3 years, or then they don't need to make a notification. If they file their claim within 6 months of the period end and they've never claimed before, you don't need to make a notification. The named official we've covered, the agent again we've covered as well, which is good. I mean, we've always done these things. This was best practice for GovGrant anyway. It's not anything new. The extension of the definition to include pure maths, and the main one obviously is around the qualifying costs to now include data licenses and cloud computing costs, but that will only be for full accounting periods starting on or after 1st of April this year. But I won't go into too much more on that now. If we're short time, I didn't realise, sorry. So what wasn't expected and well, widely expected but wasn't publicised that was going to happen ahead of the spring budget. So the new support for R&D intensive industries, where if the company's spending 40% or more of its overall expenditure on qualifying R&D activities, then they do get that slightly enhanced rate over and above what a profit-making company would do, or a less R&D intensive company would do. So they're badged that up as an extra giveaway when actually it isn't. So it would have been up to 33% of the original spend. It would have reduced to sort of 18.6, and now it's roughly like 27%. So it's still a saving for HMRC, but they've badged it up as an extra giveaway, which isn't quite accurate, but still better than nothing. The recent consultation, as we touched on earlier, that ended on the 13th of March, and that is widely expected now to consolidate the two schemes, but also soak up some of the subcontractor and overseas expenditure. So overseas expenditure should have been excluded from the qualifying criteria from the 1st of April, but that's now been delayed by a year. So that would lead us to believe that that's going to get sort of wrapped up in that new consultation that's looking at the combined scheme. And it's probably going to have something to do with IP and ownership as well. The draft legislation should be coming out in the summer. And then the requirement for providing the additional information, which I touched on earlier, that has been brought forward. So that was originally going to be for full accounting periods on or after 1st of April this year, same as the other costs. So cloud and computing costs, but they've brought that forward for any claim that is submitted on or after 1st of April. So that's going to be a major administrative burden on well, the advisors basically. So from what's required from the additional information sheet, there's the administrative side, so all the normal UTR, PAYE reference, things that you'd expect them to need to know. But then they want to know about the technical compliance, and this is literally filling in a form, a web-based primitive form via the HMRC gateway. So depending on the number of projects and the level of detail, this is going to take 2 or 3 hours a claim, copying and pasting from the report that you still have to submit anyway. It's absolutely bonkers. It's going to make their life easier to assess risk and spot things that they want to look into, but you have to log into your agent gateway and then fill this form in for the client, and you have to do that either before or on the day that you are submitting the tax return to include an R&D claim. When I asked if there was going to be an API to be able to submit this electronically, they looked at me like I was talking about space travel. It was like, of course not for a long time. So this is going to be a pain, but it will cut down on fraud and error. But again, it is a laborious additional step that needs to be taken before you can submit an R&D claim. And because of the expenditure is only going to be high level costs, when I asked if there's still the need to submit an R&D and financial report, they said that yes, it's still best practice to submit it. So you're going to have to fill this in and submit the technical and financial report to give the additional level of detail on the financials that you're including, rather than just the headline summary. So yeah, hopefully they don't go ahead with this, but it looks like they're going ahead, because even if you are claiming for the high R&D intensity, you need to notify on this form. So
will that be from April or August?
So that's from August. So any claim submitted from the 1st of August this year, you have to submit this and complete this form. Even if you completed the advanced assurance form, sorry, not the advanced assurance form, the pre-notification form, which contains most of the same information, you have to start from scratch and fill in again for the actual claim.
Okay, so Desi's asked, as we all know, HMRC are very hot on the matter of R&D being claimed. His question is a clarification regarding answering common questions about HMRC, asking for an explanation of what the scientific or technological advances sought was or were. Mm-hmm. And he's specifically asking there about R&D on developing software.
So, I mean, when you're looking specifically at software, then it's really, or any R&D claim, it's trying to separate out what is routine software development and what would any software developer do as part of their routine day-to-day work, and how did you build upon and how have you advanced the field of this technology that you're building on. So how wasn't it using it for its intended purpose? If you're customizing a software that was intended to be customizable, that's not R&D. If you're linking things together with an API, most people know how to do that. 10 years ago, that was, groundbreaking, and that was definitely involved an advance to the field of science or software engineering, or whatever you wanted to badge it up as. But 10 years on, APIs are very readily available now, and they're very easy. Almost, there's no programming solutions, it's or no code solutions in how you can get things to talk to each other. So that's why that baseline is so incredibly important. And at the time the project was started, because unless you've done that to say this is the technology that was in existence, because it's not even enough to say this software solution didn't exist. The fact that it's new and novel doesn't make that a qualifying R&D activity. It might be innovative, it might be commercially fantastic, but if you've used known techniques and existing knowledge to create it, that's not qualifying R&D. And that's what we see all too often, really, is that the claimant has relied upon the features and benefits and the outcome of it, or it's new, it's novel, it's bespoke, it's never been tried before. They're not automatic qualifications into a qualifying R&D claim for tax purposes. It's how you went about those, and that's where you really need to drill into the advance and what the advance in the actual technology. The other place we see people get tripped up is that it can be the company's own knowledge that's being advanced, and not an advance to the industry as a whole, which also isn't qualifying.
Okay, James has asked for clarification. Are GovGrant and other providers still going to be submitting full R&D reports as well as the new additional digital form information?
We will, yeah. I mean, as I said just then, the form also doesn't allow you to attach any images or diagrams, so it makes it very difficult to actually explain complex projects. So we will continue to submit a full report. Same with the costs. You can't submit a breakdown of the employee costs and which employees you've included at which percentages on the form. You are only putting in the high level, this amount on EPWs, this amount on subcontractors. So they're going to want to know the underlying information anyway. This is very much to high level help them mitigate risk and spot things they want to look into further. So we'll still be completing our claim reports as before, and populating this form from our claim reports, which would be very frustrating and time consuming, but I don't think we've got any choice.
Okay. Do we know yet what expenses will be taken into account when calculating the 40%? Will it be all expenditure, cost of sales, overheads, etc.?
Yes, they haven't published it in the guidelines yet, but the way that it was communicated was that it's the entire expenditure of the business. So anything that's gone through the P&L, if your qualifying R&D costs are 40% or greater than that, then you would be deemed to be high intensity R&D. And if you've got a period that straddles the 1st of April, so say you've got a period that only goes a month into the new tax year, they still look at your full accounting period, and as long as your overall QE is greater than 40%, then that's fine. You're still considered high intensity, but it will only actually apply to that 1 month that's gone into the new tax year.
Okay, thanks. Now, the last question then, if we can summarise this in a minute, what are the main areas you see R&D claims falling down on when they're investigated?
Normally the advance. Everyone is fairly easy to name uncertainties because they're pretty apparent, but it is the advance, and where even companies and clients struggle with that, because if you speak to them as to why is this better, why is that different to what's out there in the market, everyone is pre-programmed talking about features and benefits and the end outcome of the R&D project, if you like, and that's not what HMRC are interested in. It's how you got it to be faster, shinier, whatever it is. It could be the first in class to do whatever it is. It could be it's the first in the world to do this, but if you've got there using existing knowledge and known techniques, then that is not an R&D or a qualifying R&D project. So drilling into that, what is the underlying advance, and that's really why it needs someone technical to have that conversation and understanding with the client or the competent professional at the client, because otherwise you're going to get led down a path of you're writing about features and benefits that the client is used to talking about but aren't actually what HMRC are interested in. That's what it does. It's not how you got there and why it's compliant.
Okay, great. Thank you very much. Well, that concludes our webinar today. Thank you all for listening in. I'm sure you found that really interesting. There was a great deal of technical content there, really useful technical content, which I hope everyone found useful. If anyone does have any questions on it, on the R&D, or they're interested in the R&D product in general, then please do contact us through the usual manner. So lastly, can I thank you, Vicky and Clive, for presenting today.
You're welcome. Thank you.
And we will be putting on another one of our webinars next month, and I hope to speak to as many of you possible as then. So speak soon. Bye-bye.
Thank you.
Thank you.
Thanks.
Bye all.
Bye.